Gold. Should we give gold the benefit of the doubt? As gold is relatively strong today, coming to test this 50-day moving average, I want to provide this update suggesting that perhaps we might have to give gold this benefit of the doubt. There is a chance that we have seen the intermediate cycle low over here in the middle of November. Yes, that would give us a relatively short cycle lasting for only 141 days. That's for the intermediate cycle, and the daily cycle lasting for only 36 days. Those are pretty short, but cycles of such length, both intermediate cycles and daily cycles, have taken place historically. So while I'm still leaning on the possibility of a more recognizable intermediate cycle low, I have to admit that there is probably a rising possibility. I would give it, let's say, 40% chance, so pretty likely that gold has already made the intermediate cycle low, in which case we'll see a breakout above the 50-day moving average, perhaps a retest of that 50 DMA before gold pushes higher into January and February. So while this is only, let's say, 40% chance scenario, it's probably not a bad idea to get ready for this possible outcome as well. And one way to do that is perhaps get some positions in gold if it breaks above the 50-day moving average, and have this 50 DMA as your decider on when to get out of those positions if gold doesn't maintain its strength. In that case, you'd only be risking 1 or 2 percentage points over here for that 40% scenario where gold pushes to new all-time highs. And still my 55-60% chance scenario is that gold does actually give us a more recognizable intermediate cycle low, a bit closer to the 200-day moving average, perhaps in the next couple of weeks, before pushing higher into that seasonally strong January-February into a new intermediate cycle. That could perhaps give us a bit of a confirmation on RSI, positive divergence on RSI. That's a situation where price shows lower lows accompanied by higher lows on RSI. That's a positive divergence, usually preceding a bit of a rally. Although that drop in RSI into mid-November, all the way up from 74 all the way down to 34, might again actually be enough for that intermediate cycle low, might be enough for that 40% chance scenario of a new cycle starting all the way into January and February. So there's that 60-40 split at the moment, with market sentiment, gold optimism index, still favoring that one more dip down, perhaps not a very deep dip. We see historically, even in good times, say somewhere around 2021, intermediate cycle lows are accompanied with this optimism index a tad below the level of 50. So even in this inflationary environment, when even the central banks are shifting from forex reserves into gold reserves, perhaps even in this environment, while again there is a 40% chance of higher highs all the way up from here, there is probably a 60% chance of a safer re-entry with this optics level a little bit closer to the level of 60. But with this current strength, we probably have to keep our eyes open and see what gold does today and perhaps over the next couple of days. So that would be my suggestion. That would be my split between the 40-60 scenarios. Let me know, what do you think? Which is going to happen first, 2800 or 2500? Let me know down in the comments below. Have a marvelous Monday. Bye bye.